Join me as I dive into the world of investing to see if Costco stock is actually a smart choice or just another hype. When it comes to investing in the stock market, there are few companies as intriguing as Costco. As a retail giant with a loyal customer base and a business model that seems almost immune to the rise of e-commerce, it's no wonder investors are eager to jump on the bandwagon. But is Costco stock really a smart investment? That's what we're here to explore today. One of the biggest concerns investors have about retail stocks is their vulnerability to economic downturns. When times get tough, people cut back on discretionary spending, and that can be devastating for companies that rely heavily on consumer sales. Additionally, the rise of e-commerce has forced many retailers to rethink their business models and adapt to a new landscape. We've seen it time and time again, companies like Toys R Us and Sears that failed to evolve and ultimately paid the price. But Costco is different, or so it seems. The company's membership-based model provides a steady stream of revenue, regardless of economic conditions. And with its focus on bulk sales and low prices, Costco has managed to maintain a loyal customer base even in the face of increasing online competition. Still, investors are right to be cautious, and we need to take a closer look at the company's financials to see if the numbers really add up. Another concern is the company's reliance on a few key product categories, such as groceries and electronics. If consumer spending patterns shift dramatically, Costco could be left exposed. And let's not forget the growing threat of competition from online retailers like Amazon, which is increasingly encroaching on Costco's territory. Moving on to Costco's business model, financial health, growth potential, and recent performance. The company's warehouse club model is all about scale and efficiency, with a focus on providing low prices to its members. This approach has allowed Costco to maintain a strong profit margin, even in a competitive retail environment. Financially, the company is rock solid, with a low debt-to-equity ratio and a consistent track record of generating cash flow. In terms of growth potential, Costco has been expanding its e-commerce capabilities and investing heavily in digital transformation. This has allowed the company to stay competitive in an increasingly online retail landscape. And with its presence in key markets like the US, Canada, and Asia, Costco has plenty of room to grow. Recent performance has been solid, with the company posting steady revenue growth and stable profit margins. The stock has been on a tear, with a significant increase in value over the past year. But is this growth sustainable, or is it just a short-term blip on the radar? So, what do the numbers tell us? Is Costco stock undervalued or overvalued based on current market conditions? Based on my analysis, I believe the stock is currently fairly valued, with a price-to-earnings ratio in line with its peers. However, there are some warning signs, such as a relatively high price-to-book ratio, which could indicate that the stock is due for a correction. On the other hand, Costco's strong financial health and growth potential mean that it's not entirely without upside. If the company can continue to execute on its digital transformation strategy and maintain its focus on providing value to its members, there's no reason why the stock can't continue to grow over the long term. In conclusion, is Costco stock a smart investment? The answer is a resounding maybe. While the company's financial health and growth potential are certainly attractive, there are also some warning signs that investors need to be aware of. Ultimately, it comes down to your individual investment goals and risk tolerance. Thanks for watching, and I'd love to hear your thoughts on Costco stock in the comments below. If you're new here, consider subscribing for more investment insights and analysis.